But I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank?
No. So what is it that none of us are supposed to know that we shouldn't know, right? So all of the checking account, savings accounts, all the bank stuff that we have in the banks equals $9 trillion. That's all of our deposits added together as Americans is $9 trillion. The FDIC, the insurance that's supposed to cover that, has $125 billion worth of assets. So you do the math. That's 1.388% of all deposits. That's all that the FDIC has. If there were a run on the bank because people knew this issue, there's not enough insurance to cover people's losses. So in the summer, the Fed changed the reserve requirement to zero. So banks don't have to have anything on hand at all.
The banks are planning on taking all of your money to pay off their debts.
I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be. That's
the FDIC currently has less than $200 billion in assets to insure over $9 trillion. That's just 1.3%. They know that a system collapse is coming, and they are already planning for bail-ins. As trust begins to fail, the people will begin to withdraw their funds, which will only guarantee a banking collapse. This is known as a bank run. In 2012, the International Monetary Fund, known for their reputation of coercion, violence, and extortion, published staff discussion notes entitled From Bailout to Bail-In, Mandatory Debt Restructuring of Systemic Financial Institutions. So what exactly is a bail-in? It is officially obfuscated with elaborate equations, but to put it simply, it is when the bank steals your money directly from your account.